Good morning, everybody. Today is Friday, March 20th, and I'm going to muscle through this pre-market analysis. I am definitely under the weather this morning. I've been not feeling great all week. But anyways, um, nothing on the dockets for today. I thought there was some kind of announcement that was supposed to be happening at 9 o'clock today. I don't see anything on the dockets today. Maybe I'm missing something, but definitely some interesting stuff that was happening yesterday, that afternoon trade, but we'll get into that right now. So if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and go down in the description to hit that link of our Discord channel to come and join us for live trading from 9:30 a.m. to 11 a.m. Eastern time every day, Monday through Friday. Let's get over this. So we've been starting with the VIX lately, the volatility index. So you can see we closed that gap, from the gap down that we had from Monday. Closed that yesterday. And then, so now it's working its way down, which is good. You want to get this VIX down below the 20-day moving average, which is 22.98. If you can get below there, things are going to simmer down. And then the volatility may die off. And then we can probably get back to some normal trading, and the volatility will die down. But right now we're still it's still elevated a little bit. Honestly, I'd like to see this. I'd like to see the VIX get down to the 50-day, down here at 20, actually below the 20. Makes me feel comfortable, and even down to 200, that $17 range there. Then we get comfortable with putting risk back on, because I think everything that's happening right now in the Middle East, it's a risk off nature for most investors. So. Let's get over to the ES and do our normal routine like we do every day. So the ES, I believe we're down below. We're definitely below this 200 moving average, and I think it's coming in. It's not showing up on my charts. It may be showing up here at the 66.19 level. I'm going to have to go and take a look at that afterwards. But we have to regain certain levels here. So we are trading in, but right now we are trying to trade in between this range here, which is a monthly high from July 20th of last year, and then August high of 2025 last year. So right now, the thing, if you can regain August 20th, actually the range is 65, 66, 75 to 66, 99, 85. So if you can regain the 66, let's call it 6640, excuse me, 6640.07. If you regain that, I think there's a couple speed zones that we have up here. If you regain this level, I think you can quickly move up into this 66.83.32 level. And then if you really can get some power into the market, there's another speed zone above that, above this 67.10.25. There's another speed zone here. And what I mean by speed zone is when the market goes in one direction, and there's no buyers or sellers on the other side, right? So this is straight downhill. Even though it was pre-market, no buyers here to step up. That becomes a speed zone for whenever the market turns around and goes back and starts headed back the other direction, whenever that may be. So very important, though, you're going to have to hold this July high of 65.83. If you lose that, you come down here and test the 64.90, which is September's low of last year. And then below that, the next level of support I have, unfortunately, it doesn't come in until 63.49.5, which is August of 2025's low. So hopefully we don't get that sell-off. There was some positive news yesterday afternoon. I think there were some other foreign countries that were going to help with this trade moves to get the oil flowing properly. But it's still volatile out there right now. So let's take a look at the SPY. So yeah, so you can see what the SPY, it should be a mirror image of the ES. We're below the 200-day moving average. So this is really important here. 660 on the SPY. You have to get above that. When you lose your 200, that's a problem. So I think downside is going to continue to happen until you can regain this 200, which is 660.10. Their next line of support down here below this pre-market low at 653.20. I have down here August of 2025 high at 649.45 rather. And then below that, if we lose that, you have July's monthly high at 639.85. So Those are some levels that you're going to have there if you lose those levels of support right there. Below that, you have September of 2025's monthly low at 634.92 on the downside there. So I would say longs would come into play today if you can recapture this 200-day moving average, 660.10. I would anticipate, though, if you do get a morning pop into this could be a pop and fade level to sell short here with your stop just above that, right? So let's get over to the NASDAQ. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. Very similar on the NASDAQ. You do have open point controls here from yesterday. Actually, this is from the 18th. 24, sitting at 24,686.68. It's an open point control level though. But here's the speed zone again. You can get above this 24,495 level. You push into this 24,611.97 level, and above that, you go into that open point control, which is 24,686.68, where you would get some resistance. And, we're still below this 20-day and 100-day moving average, sitting at 24,904. And then on the downside here, you want to continue to hold this November low at 24,153.50. Below that, you have September's low at 23,976.5. Below that, I don't have anything until 23,544.25, which is September of 2025's low. So let's get over into the Qs again. If you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. And then go down in the description and find the Discord link so you can come for live trading from 9:30 a.m. to 11 a.m. Eastern time. So the Qs, same thing on the Qs. We're still below this 200 moving average, and it's sitting here at 592.58. So you need to regain that in order to get some upside. But same thing here. If you can regain this I would say 596.46 would be comfortable. If you regain that, you have a nice speed zone. I think you can quickly move up to that 692 level. And then above that, you have another quick speed zone that you can move into this 20-day moving average at 604.31. So that'll be those will be some you'll get some definitely headwinds there. But if you can get above this, you'll get some good tailwinds to push into those levels right there. On the downside, if you lose this 590.36 level, I've got a 583.32 level. That's August of 2025's high. Below that, you have I would say 580.74, which is a monthly low in November of last year. And then if you lose that, you have 574.63 coming in at July monthly high. So those are going to be some pretty significant levels there. I don't have any, I did not plot any weekly highs and lows in there. I'll probably do that over the weekend, but these are more solid. When you do a monthly versus a weekly, it's more solid, right? So if you do a an hourly versus a 30-hour, the longer chart frame you do, it's more solid of a level, right? So if you do a 1 minute versus a 5 minute, your 5 minutes more solid, obviously, right? And if you do a 15-minute versus a 5 minute, your 15 minutes more solid, right? So and etc. all the way down the line there. So let's get over into Tesla again. If you're new to the channel, hit that subscribe button, and then hit that thumbs up button and like this video. Hit the bell so you can get future notifications for any other videos that I make. I am going to start making some basic educational videos. Had some new people in the trading room yesterday that were very new to trading, and dawned on me that I should be making some very introductory videos and not assume that people have a lot of knowledge towards trading, because I think if you just break things down in the basics, I think that's how it's a great way to start. But anyways, Tesla, definitely stair-stepping lower. Let's start out with a longer chart frame here first. We'll go to the 4-hour chart here on Tesla here. So Tesla will clean this up a little bit for us here. Definitely breaking some major levels here. This resistance, this midline regressional trend line I have here is a 5-year midline regressional trend line sitting here at 377.77. So big level here, I would say today. If we lose this level, I don't have much support here until probably at least this 367.71. And then we're going to start hitting these open point of controls that we have open here from September of last year, right? So we've got one here, 365.90 from September 11th of last year, and then one final one down here at 333.78, and that is from last year as well. I'm not going to bore you and scroll all the way back and show you now. However, that being said, we have open point of controls. We have quite a few above us, which is positive, right? And if you're new to the channel here, I talk about these open point of control levels for a long time. I leave them on the charts until they get filled. And what I mean by filled is after the day is over, I'll just give you a quick idea of what an open point of control is. So here's a point of control. So this is a script that I have on my charts. It's automatically plotted for me. This yellow line shows where the heavy volume is traded, and it gives an average price on where the large volume is being traded here, okay? So this price here on March 18th, 397.82 was where the heavy volume was being traded at, okay? So now what happens is after the market closes, you can see this black area is when the market is open, and this gray area is aftermarket. This dotted line here is pre-market, right? So this is aftermarket. After the market closes, then the market shuts down, and then it opens back up in the morning, and then we have the market open up the following day, right? So now what happens is I have these point of control levels. Now these point of control levels, I keep them on the charts until they get closed. And what do I mean by that is, so you could see how market closed, and then in the post-market, it didn't come back up and touch this level, okay? So it didn't come back up in post-market and touch this level. Pre-market, it didn't come back and touch this level. And then in the regular trading hours, it did not come back and touch this level. So this is considered an open point of control level, right? So I'll show you what it looks like when a control level gets hit, right? So here, this is a level that was open. It was open after the close, did not come back down here and hit it in pre-market, did not hit it in post-market, did not come back and hit it in pre-market. Actually, it did come back and hit it in pre-market. So it came back, hit it in pre-market just before the market opened, and then it took off when the market opened. So this would be considered a filled point of control, right, for that one day. But then what happened was then the day carried on that day, and then we had, after this March 18th day, it created another open point of control for that day. So I marked this as a filled point of control, and then came back here and then took away the word filled, because now it was another open point of control. So now we have open point of controls way up higher here. We've got some open point of controls. Let's just go here and I'll show you this. It'll clean it up here. I'll be able to do it this way. So we have some open point of controls. So this is a fill point of control at 434. We have some open point of controls at 455. We have open point of control at 478. Okay, so those, we're going to stay on my chart until they get filled. And so last year, we had an open point of control at the beginning of the year at $417 a share. Well, the market pulled all the way down below $200 a share last year. And I left that point of control open, and it filled 9 months later. Okay, so these point of controls, this is a perfect example. This point of control has been open since September of last year. So if you count the months on that, right? So you've got, September, October, November, December, January, February, March. We're now approaching 6 months where this still has not filled, and this still could fill. It looks like it may fill. We're on our way down to fill, especially if we lose this midline regressional trend line here, sitting here at 378, and I don't have much down here to support it. We could fill it pretty quickly, right? A lot of the times what could potentially happen is this stuff may fill overnight, right? We're on a Friday right now. There could be some volatile news that happens over the weekend. Could open up down lower and fill this overnight, which I can't stand when that happens. But that's trading for you. But nonetheless, in order for Tesla to continue to move higher, we are going to have to regain some certain levels here. So let me just get this back to where I need it to be. So there are some speed zones that have definitely been created here. I would say, here's one right here. If you can rally back above this 384.22 level, then I think you could. I think you could push back into this 389.87 level, right? I think you can get back there pretty quickly. I think it was a straight down shot yesterday, and so yesterday there was some pretty big, whippiness in the afternoon right here. Like you can't see it on this candle here, but it was a straight down shot right here. And then all of a sudden, boom, it shot all the way back up. So it was a lot of volatility. And then we hit this level. And I thought once we got through this level, I thought we were going to go right and have that speed zone right here. You see this straight down shot here? This is a speed zone. I thought we were just going to get right back up here and close the day up there. And then major rejection came in and we closed all the way down for the day. And now you can see where we're at. So this is going to be a big level where we closed yesterday. Going to have to get above this closure here at 380.3 in order for us to move higher. This probably be the good first rejection point to take it down to sell. But we're going to be in this range right here. It looks like here is so if we lose this 378 level, I don't have anything down here until 367.71. Does that mean it's going to go straight down here? No, but there's a good target. This is a good target if you do lose this level, right? And you have your stop point and you have your risk intact here, right? So, anyways, that being said, you do have to be careful that these markets are, what this showed me yesterday is that these markets are very sensitive to any kind of tweet or any kind of news, because I think what had happened here during this big sell-off here. So let's look at this closely here. What happened here? I think let's look at this on let's go down a 1 minute. So here's a 1 minute chart yesterday, right? So the market was selling off, and it was making new lows, and then boom, it took off. And this is all based on the news that other countries were going to start providing ships to help out with the oil shipments, right? And then boom, at the end of the day, it lost its steam, right? So this is all news driven right here. So that tells me that you have to be careful. Don't get too short and too comfortable on the short right now, because there's a lot of things that are already priced into the market right now. I think that, based on Powell's speech, you already have priced in the lack of rate cuts now for the year. I think now they're only probably banking on having one rate cut instead of two, and then Powell sticking around to create a little more, turbulence as far as the Feds go. So that's in the market. I think the war is, we're closer to, the bombing being over versus starting. So that's a positive thing. But it's still volatile, and it's still, once the bombing stops, then it's going to, then the fun will begin to figure out, okay, well, what's the end game now? How do we fix all this stuff here? So anyways, getting into the options trades on what we're going to do for today. I'm going to start off with today's expiration date, 380 calls and 380 puts. So they are going to be really close to both of them being right on the money. One of them will probably be in the money. I think if the market had opened right now, the puts will probably be right in the money, and the calls will be just kind of out of the money. You could see where the premium closed on the calls at $4, and they closed at about $3.65. So I anticipate both of these premiums are going to open up very similar to one another, and I would say they're probably going to open up in the $3 range, higher, mid threes. They'll probably open up. I'm going to see how they respond, and then once the market opens up, if they're too volatile, I'll switch to Monday's expiration date. So what is the charting tool that you're using? Also, do you have a script? Open volume control. So the charting, I use Thinkorswim for my charting. I've tried TradingView and everything. Thinkorswim is very, to me, I think Thinkorswim has the best charting tools out there. Plus, I've been adding scripts throughout the years and kind of tweaking different things. Indicators that I have on here, these are, so like, for example, this is a script volume that I have here. So you could see here, let me just make it bigger for you. So what I have here, this is a script it's a RSI type indicator. This is a script here. This volume indicator is a script. You could see how your regular volume indicators will either give you a solid green or a solid red, one way or the other. This one kind of tells you, okay, well, it shows you that this whole candle here, but it identifies, okay, well, this part of the candle here was selling and that part was buying, right? So that, I have my different scripts up here where they're all clicks of the button for me. I could just go right here, all clean. Here I've got, high, low of the 5 minute range. I've got my Camarilla levels here. And then I've got, what else? A good one here. I got a good one here, which is 5-day high and low. So this plots out my 5-day highs and lows for me. Here's one where I've got the just plotting out the 200 and the 20-day moving average. So, some people have their different trades based on that. So there's all kinds of indicators out there. But the best advice somebody gave me a long time ago, less is more. But you have to find out what your sweet spot is. And, and what I do here on the trading channel, if you come and you hit the, go down in the description and join the Discord, this is the screen that everybody sees on my Discord channel. And I go over the 5-minute opening range trade. And this is another script that I have on here where when the market opens, you could see this green rectangle here. This is another script. It automatically plots the 5-minute opening range. So as it's building in the first 5 minutes, you see this green rectangular box start to grow. And then once it's done for the first 5 minutes, this stays stationary on here. So then you could base your trade book off of this first 5 minutes, right? You can see yesterday was a very difficult day because you didn't really have a break one way or the other out of this 5 minutes, right? You stayed within this range. So anyways, that is, but the thing is about this stays stationary no matter how far back I go. So I could go back and I could do my back testing any day of the week. I could look at the volumes. So you can see here, so, you make your thesis based on your 5-minute opening range break. If you break higher, and then, what I do is I'll base it here, go back to my trade book here, my trading platform. If I think the market's going up, I have my calls up here on the top. If I think the market's going lower, I have my puts down here on the bottom, right? And then what I do is I'll strategically, pick my calls. I try to be anywhere, as far as my strike prices, I try to be, close, maybe 1 or 2 strike prices away. If I have a couple days of expiration. So like today, I'm going to start out with today's expiration, which makes it pretty volatile on the day. So what I do is I'll be pretty much right on the money, right? Because I want these to move with the equity price. But I'm going to see if they're pretty volatile on the morning, because the mornings have been pretty volatile as far as the price action. I'll probably switch to Monday's expiration date. So that buys me a little more time, which is the theta on the Greek side of things. It'll buy me a little more time. And then I'll be able to, the premiums won't be as volatile when I'm trading, right? So then if I do buy myself time, I expand my strike prices out. So for example, I'm starting at 380 right now. If I do switch to Monday, I may switch to a 400 call, maybe a 395 call or a 400 call, right? So I give it myself a little more time, and the premium price may drop a little bit because I'm expanding the strike price, and the same thing on the put price too, right? So if I extend my time out and I go till Mondays, I'll probably lower my put price, strike price from 380 maybe to 370, right? And that's pretty much the basics of it. But come on into the Discord room, 9:30 a.m. Eastern time, and I can answer more questions in there. Aside from that, everybody have a great weekend. I'll be sending out a video on Sunday to go over the week ahead. And also, those of you that have been signing up on the website for newsletters, we'll be posting our first weekly blog this Sunday, so look out for that. And if you haven't signed up, go to QOLTrading.com and sign up for, just put your email address in there and you'll be getting a newsletter, a weekly newsletter. First one's going out this Sunday. If I don't see you in the trading room, have a great week and have a great weekend, and I'll talk to everybody soon.